The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the weekly perspective, the week ending July 9th, 2021. Well, a lot to talk about. First thing I think I'll talk about this week is that techs are looking strong in the stock market. Apple is broken out of a cup base, looking strong. And then on top of that, more importantly, of course, are the credit and debt markets. So first comment is that looks like the yields have bottomed and looks like they're going to start back up. The 10-year hit the 200-day moving average. It may bounce off there. It actually did, but one day doesn't make a market. And then on top of that, and I've already done a couple of videos, so you can look them up, about this Wells Fargo stopping their personal credit lines across the board. I think it's within 60 days, so this will cause some contraction in, obviously, their credit lines. Will those people or clients be able to find credit lines at other banks? Probably, at least in most cases. But it would cause some problems for some people based on what their positions are, if they're able to, find credit where they need it or not. So a lot has gone on up to the 28th of June when the Basel III took effect in some jurisdictions. It's not going to take effect in others, but this is a rather interesting article from Reuters. Britain carves out an exemption for gold-clearing banks from the Basel III rule. A British regulator said on Friday, that's today, that banks clearing gold trades in London could apply for an exemption from tighter capital rules due in January 2022, removing some of what was a threat to the functioning of the market. Well, functioning of what market? The paper market. Surprise, surprise, surprise. London is the world's biggest physical precious metals trading hub. It is a clearing system operated by a handful of large banks with access to metal and vaults, settles gold transactions around $30 billion a day. The entire silver market is $30 billion. We mine 850 million ounces, and we recycle about 150 million ounces, so that's 1 billion ounces, and $30 silver is 30 billion ounces. So London trades the entire annual supply of silver in dollar amount on a daily basis, according to this article. The upcoming rules, known as the net stable funding ratio, are part of the Basel III regulations designed to make banks more stable and prevent a repeat of the 2008-2009 financial crisis. Yeah, right. All right, you can read the rest of the article. There's the banks that we love so much. The London clearing banks are JP Morgan, HSBC, ICBC Standard, and UBS. JP Morgan declined to comment, and others did not immediately respond late on Friday. I made the comment that even if this, does what it's supposed to do, will the banks follow it? And I think we've got our answer. And as some of you know, every week for the last few weeks, I've tried to put something in, just kind of a tip of the hat to the Wall Street silver crowd. And this week, they're in Reuters. So let's just talk about it at that level. Can Reddit silver, quote-unquote, apes beat the market? Again, this is July 9th today. Kerry Cranker, 56, has worked in kitchens all his life. Since March, he spent about $100 a week, half of his spare cash on silver coins. He's part of a growing social media movement who say they're buying bars and coins for protection from the coming age of inflation. Well, inflation's really never left us, but certainly has been rather benign relative to times past. Nonetheless, it is going to accelerate. Talks about market professionals unlikely to succeed. There's plenty of silver, and central banks in the United States and Europe expect inflation to stay in the low single digits. So there's a key. So how much silver is there? Well, the silver market is the bullion market. The bullion market consists of commercial bars of 1,000 ounces, approximately. Very few are exactly 1,000. They're a little under, a little over. The exact amount is actually physically stamped into the bar with the hallmark and a number to be associated with that particular bar. So there, as I've said in the past, there are 21 million Bitcoin available after every one of them is mined. In the silver market, there's only a tenth that many 1,000-ounce bars available. So actually, if you count it by units of commercial bars, which is the silver market, it's 10 times smaller than the Bitcoin market on that basis. So Bitcoin today, I haven't looked, but I'm going to say it's around 30,000, 34,000 probably. And a commercial silver bar is today about 26,000. So 1 bar of silver is less than 1 Bitcoin, and there's 10 times fewer of them than there are Bitcoin. Something to think about when they make this statement that market professionals say it's unlikely to succeed because there's plenty of silver. Well, really? There isn't. There isn't plenty of silver. That isn't true. And under the section corner of the market, prices of silver and gold, which traditionally are seen as hedges, as safe stores of wealth, have risen since 2019. Gold is up around 40%, and silver around 70% since then. Remember that silver's at about an 8-year high right now. And yes, it is languishing between 26 and 28, going sideways. I'm well aware of that. But really, it's done quite well here of late, meaning from the March bottom of 2020 till present day, wiping out 8 years worth of lows. So I'm still pretty happy, and I think that we're going far, far higher, but we do probably have to work through some more ups and downs before we get there. Contracts representing about 800 million ounces of silver are active in the New York futures markets alone, more than twice the amount the exchange says is in registered vault, not all which is available for delivery. Much of the silver that banks buy and sell in London, another big trading hub, is borrowed, bankers and traders say. So now they're sort of contradicting that other one I highlighted about just all the silver. Now what they're saying is that the contracts represent 800 million, okay? So that's how much is in the futures exchange in New York. And more than twice the amount the exchange says is in its registered vaults. Well, how much is in the registered vaults for the registered category is about 100 million ounces. So I'm not sure if I'm reading this right or they've got their numbers wrong. So they say contracts representing 800 million ounces of silver are active. Yeah, that's true. That's how many contracts are open. And New York futures market alone, more than twice the amount the exchange says is in it. Oh, so it's saying that they have 400 million ounces. And yeah, if you count the eligible, you do have about half the amount that's in open interest. So sorry for the confusion, folks, and thanks for bearing with me. I'm not going to edit this out. You can see I'm only human. I just wanted to get it right for everybody. Oh, let's go here. A hell of a time. Reddit buyers sit at the end of a fat silver pipeline. Only about a quarter of the 1 billion ounces or so that are produced each year is used to manufacture the bars and coins that most are buying, analysts say. Most of the rest is used for jewelry and industrial applications. Okay, fine. So what if the apes go ape and decide to take up 50%? What if they take 70%? Then what happens? The price goes up. So that's a rather ridiculous statement from my perspective. And here we go. Let's get some real power in here. 39 analysts and traders polled by Reuters in April. Only 7 thought silver prices would average 30 or more in 2022. The highest average that they forecast was 44. Well, there you have it. The apes made it to Reuters. Phenomenal. Let's look at this one here. This is straight from Reddit. Now is the time to wake up and take the power back in the hands of the people. Amen to that. Money is power if you believe what I believe. If money is power and money is gold and silver and everything else is fiat, phony fiction, and you have money in your hands, then you have taken some of your power back. Very well done. I'll leave it at that and move on. This is a rather interesting article. This is from industrial side, Scrap Gold. It's called Scrap Monster from Seattle. Gold allocation in portfolios to witness significant boost. Well, if you get a big boost in institutional buying in gold, which a lot of it is institutional buying, a lot of it is just banks, central banks that buy it. But anyway, the most recent report published by the World Gold Council suggests that gold allocations are on the rise among institutional investors. For the record, the gold market has the central banks buying at an increasing rate since 2011. Let me reframe that. Since 2011 to present day, net buyers, central banks have been net buyers of gold. In the last several months, it's increased to like 43% over their average. A lot of this is attributable, in my view, my perspective, because they see what's coming. If you want more information on that, I did an interview with As Good as Gold Australia. That will be posted on our blog. You can listen to part of it. You can speed up and get to that part of the interview where we go through what entities, what nation states really are buying gold, and in some cases hand over fist relative to their GDPs. According to the study, about 1 out of 5 institutions has specific allocations of gold in their portfolios. Also, institutions in the EMEA region were found keener on gold allocations. The average gold allocations by investors in their total portfolio stood at 4%. The survey also found that nearly 40% of the current gold investors expect further increases in their exposure in the next 3 years. Also, 40% of institutional investors who currently do not have exposure plan to make investment during this time frame. And I'll conclude with this. This is from the website goldsilver.com, and this is a video with Mike and Jeff. Gold and silver versus the fiat free-for-all, the purchasing power war. Well worth it. I think everything they put out is pretty much worth listening to. I particularly like this, so I will leave it there. I will be back with you next week. Stay safe, stay strong, and interesting times, getting more interesting almost on a daily basis. Again, this is David Morgan of themorganreport.com.